Hello, I am the Stock Options Hero, and from here on out, I'm going to share with you stock options secrets that only the most successful option traders know. In my videos, you are going to see my secret options trading system that only a handful of people know. And as I'm sure you're well aware of by now, options trading can be very lucrative. However, most options traders are not consistently successful, or even worse, lose money trading stock options. Trading stock options can be a high probability trade if done properly. Let me show you. Now, each day I will record a video where I play simulated options trades. So subscribe to my channel and watch my videos daily to learn how you too can be a successful stock options trader. Disclaimer: these videos are for educational and entertainment purposes only and does not constitute a recommendation to buy or sell any securities or stock options. Before I dive into today's stock options video, I have a small favor to ask. If you like this video or any of my videos, please subscribe to my channel and hit the bell icon so you will see my videos as soon as they are posted. This way, you won't miss out on any paper trading ideas. Tell me in the comments section which option trades you are looking at paper trading, and if you're lucky, I might do analysis on a ticker symbol from the comments section. All right, let's leap into today's video. Welcome to another exciting video of Options Trading for Beginners, brought to you by the Stock Options Hero. Let's leap into it. All right, so I thought I would try and get a video out earlier than later, so quick recap. Profit loss for the day is $18.94. PL Open 12.59. PL YTD is 61.72. PL percent for the day is up 22.91%. So keep in mind the PL day, PL Open, PL YTD, and PL percent are all based on positions that are open or that I've closed today. This is not the overall picture because I've had a bunch of trades that I've already closed out that will not be captured by these PL columns. So to get a feel for what we've done in the past 2+ weeks is looking at your net lick or net liquidation. So our net liquidation is 110,659, and our cash and sweep is 114,480. Now, the difference between these two is net liquidation is if I sold everything in my portfolio, that's how much I would have. Cash and sweep is if I let all my credit spreads expire out of the money, then that is what my account would have. Now, that's not, cash and sweep isn't overly accurate because I close out my positions with a 50% of my original net credit. So that 114,840 is if I capture 100% of my original credit received when I put the trades on. So I'm really happy with my SPX. I'm up 1185 in 1 week trading the 0, 1, and 2 DTE, or days till expiration. So let's take a look if there are any entries. Okay, so this is a 5-day, 5-minute chart. Let's zoom in to them just for today. Wondering what we could get for like the 4100 put. So this is the 0 DTE, 4100, 4095. Can get a 20-cent credit. It's less than 5%. Homie don't play that. So let's look at the 1 DTE. Okay, so selling the 4100, buying the 4095 put. Let's see. Okay, yep, over 20%. It was at $1 when I opened the option chain. So just to show you the So 100 divided by 400, that's 25%. That's pretty good. So before you pull the trigger, I always like to go back to the chart. So 4100 is off the chart to the downside. We could even look at like the 4110. Now, when you're not sure which strike to sell, you can look at the delta. So I was mainly looking from a technical analysis standpoint. If you wanted to go based off delta, I would suggest the 17 delta, but I'm comfortable with the 4100. So yeah, 25%, we'll send that off. And this is a 1 DTE, or 1 day until expiration. And I'll keeping an eye on it and sell a bear call spread if and when it trades up around this 4140 level. Then I will look to do like a 4155, 4160 bear call spread. So legging into an iron condor. Now, what I do like on this setup on SPX, I like how I missed an entry right here to sell the bear call spread. This would have been a really good candle to get it in on. since I missed it, I'm doing the bear put spread right here where you have the MACD crossing to the upside and stochastic is heading higher. So feeling pretty good about that. Also, it filled, and the theta on this, which is time decay, is $4.43. So tomorrow, this assuming that SPX doesn't move, the price of the option will be reduced by the amount of theta. So this option will be theoretically valued at 7 cents. Just looking at the bid. So, and it has a 75% probability OTM, but looking at the chart, I would give it probably an 85 to 90%, just from my opinion. So, yeah, I'll keep an eye on that and leg into an iron condor once the price level approaches the 4140 level. Okay, so let's run a scan. So, where are my scan criteria? That's annoying. Okay. Okay, so let's change the volume to, say, 500,000. Applied volatility to minimum of 50%. Option volume of at least 100. Not going to worry about out of money percent. Okay, so the market cap is greatly reducing the number of results. Okay, get rid of the volume. Well, let's try 250,000. Play stock. Let's try this. Mark is the current stock price. This is weird. Oh, that's why. So, there we go. That's more like it. It was scanning one of my watch lists, so. Okay, saving the watch list. Skipping the futures contracts. Changing this back to a 1-year daily. And since it's trading so close to the mean, there's really not much room for error, so I'm going to skip that. We're already in this one. Looks like AI finally broke down below its descending wedge pattern. So the target price will be the difference between the support and the resistance level. To be more conservative, I would maybe measure from the body of the candle instead of the wick, and then subtract it from the price of the support level to figure out your target price. EBIX. No. ICPT. I don't like the upward trend, but I do like where the MACD and the stochastic is. So where's the 22? 2250 and the 25. Okay, that's 10%. Only 25 days till expiration. Not ideal, but let's see. So this is his 30 divided by 220, so a 13.6. And it was the 26 delta. Just doing a fair comparison. Okay, so the 27 delta. So selling the 25, buying the 30. This one is slightly above 10%. Or not even 10%. So, So the reason for that is the greater risk, less time. So for the June, you have more time for the trade to go your way. So less than half of the time. So yeah, let's just do 4 contracts. Okay, risk 880 to make 120. Selling the 2250. So it's up here. Feeling pretty good about the odds. The only thing I don't like about this trade is the overall uptrend. But if it goes sideways, we can always roll it out to the next expiration month. And by sideways, I mean goes against us or trades above our short strike. That's a good sized gap up. It probably will run a little bit, but it is touching its previous high. No, too strong. FSLY, looks like we got out. We were in this one. Okay. So about the 18. Yeah, still getting a good credit out of this one, 24%. The 18 is a 28 delta with a 79 prob OTM rounding. The 18's up here. I don't know. It was channeling sideways, but decisions. 65. Let's do like 3. Yeah, so nothing says that. Oh, wait a minute. Okay. It was a spread. I thought for a second I did a short call. So remember, our trading rule is 1% of our net lick, or $1,100 per spread. But you can always trade less than that maximum, right? So you don't have to trade the 1%. You can trade 0.5%, 0.25%, especially when you don't feel as good about the trade, but you think there's some potential to it. Okay, so it looks like it's double topping. MACD and stochastic look good. If we can get a good strike, so yeah, it's over 10%, but looking historically, it doesn't even like trading in this upper space between the top two LRC channels. And the 14 has a 85% prob OTM. Okay. Yeah, so 4 contracts. Moving on. I like this one. I like the price. I like the MACD. I like the stochastic. Wonder where the 14 strike is. So we've got a 15 with a 91.42 prob OTM. And the 1250. Okay, what if we go out? Hmm. 23%. versus %23. So the question is, do you want double the time to be right? Because we normally manage the trades at 21 days till expiration. I don't like having it so close to the price of the underlying. So for that reason, I'm going to pass. Really not much out there so far today. This one we can add to our almost ready watch list. Okay. Yeah, it's definitely more symbols than I normally scan through, so that's why I'm moving a little faster than normal. This is about how the speed at which I scan through my potential trade candidates. And with practice, you too can get this fast at scanning through them. Okay, COTY. I like everything except the upward trending LRC. But if we can get like the 15/20 bear call spread for a decent credit, I will consider it. Which is not looking good. Nope, not paying a debit for that. So going out to the next expiration month. Nope. Okay, well that makes it easier. Now, you could always look at selling a naked call at the 15 strike. But it's only trading at 2 cents at the mid. So you're risking $121 to make $2. That's not worth it to me anyway. So, and it's only worth 6 cents with 53 days till expiration. And that's 5%. So some people really like those high probability, but we previously discussed the 15 price level was a good level. You could always try the 18 delta, but then you're under the top LRC. Granted, it doesn't like trading in between the blue and the purple channels. So still high probability, but 14 and 18. Yeah, we can get above 10% of that, but sure. And the 14 is an 85% prob OTM, 18 delta. It's at the midpoint. Got GTC selected. We'll send it off. I feel good about it. We just had to compromise a little bit on the time till expiration. If we had other solid trade entries, I might have skipped over that one, but I like to trade 2 to 3 or put on 2 to 3 trades per day. So when I haven't placed many trades, I'm a little more liberal with my trading rules. I mean, it still could be a really good trade, but anyway, I think it will be a good trade. So let's see. Yeah, it was looking too strong. So be careful going short on a stock that has been showing a high amount of strength over the short term. Okay, so we're now at the 39 IV. So, gap up. This is channeling sideways. I'm curious. The 95, 100. Not even 10%. Probably due to the low implied volatility. So the higher the implied volatility, the richer or more expensive the options are. So when you are putting on credit spreads or selling calls, selling puts, you want the IV to be high. So generally an IV of 50 or greater. So, all right, so let's go back to SPX. Look to see what the 5-day, 5-minute chart is doing. So, it's trying to move higher. And if the price doesn't trade above the mean or go back around the 4140, I'm completely okay not putting on a bear call spread. I don't have to leg into an iron condor. I just want to make sure that it makes sense for the side I'm putting on. Like, if I were watching it at 8:25, 8:30 this morning, I would have put on a bear call spread, probably like the 41.55, 41.60, and then put on a bull put spread on this candle, which I did at the 4100 and the 40.95 put spread. So today would have been a good day to have been watching the intraday, and I don't know, I'm thinking I might place more of an emphasis on trading the SPX 0 and 1 DTE, because I'll be able to turn over my capital much more quickly instead of waiting for 45 days till expiration and getting out within a week or two. I can get out within a day or two. And so far, in the last week, I made $1,200 on SPX. So, yeah, pretty happy with that. Anyway, that's it for the day. If you're new to my channel, I've made a video of how to add my layout for the Thinkorswim platform. Also, if you don't have a TD Ameritrade account, please email me asking for a referral link at stockoptionshero@gmail.com, and I will send you an referral link. Make sure you include your first name, last name, and email address. That way you can support my channel for free, and is greatly appreciated. Thank you. Have a great day and happy trading.